Well, good morning and welcome to our weekly Wednesday. Today we're going to be talking about a topic that you may or may know a little bit about, and that is called renovation lending. We've actually hosted classes about this at your offices, but I wanted to just not only revisit that for those that were able to attend, but for those that weren't, I want to be able to provide you some clarity and some information about it, because some people don't even know what it even really means. So let me ask you a question first. Have you ever been in a situation where you were showing homes to a particular buyer and they said to you, well, you know, I like the location, I like the home, and you know, they go through all the things that they love, and you're like, great, do you want to go ahead and put an offer in? Or what would you like to offer them? And they say, well, I would, but, right? And then they begin to tell you all the things that they don't like. If it is not about the location of the home, then basically a renovation loan would be able to fix any of the reasons why they would have for not being able to submit an offer. So here's what I mean. What a renovation loan does is it allows you to be able to finance the renovation and the remodel of a property even as you purchase it. Now, you can do it on a refinance, but you can also do it on a purchase, and that's what we're focusing on because that's what you deal with mainly, right? So what they can do is this, just to kind of give you an example. So by the way, we have three versions of a renovation loan. We have a conventional version, an FHA, most commonly referred to as a 203K loan. You probably have heard that before. And then we also have a VA version of it, okay? So for our veterans as well. The nice thing about this is it allows them to be able to purchase their home with still the minimum down payment. So for a conventional loan, it's 5%. For an FHA loan, it's 3.5%, just like a normal FHA. And with VA, of course, we know that the minimum down is 0%. So it's a great way for them to be able to get the home the way they like it without having to pay an exorbitant amount of money out of pocket. So here's what I mean. So you walk into a home and let's just say it's $200,000, okay? And because it's $200,000, we're well within the parameters, all three of these work. And the condition of the home is such that it wouldn't necessarily, it's not what they want. Okay, so let's just start at the level of cosmetic repairs. So for example, let's say they, especially for younger buyers who have been raised in a home where their parents have remodeled their kitchen or they have certain amenities that they're accustomed to. Now you're showing them homes and consistently they're saying, well, I like it, but you know, the kitchen isn't the way I want it to be. And understandably so, they've grown up in a home where they had a really nice kitchen. So they would like to mirror that as well. However, not recognizing maybe sometimes that their parents didn't have that when they first were starting and so forth. So that's just one particular scenario that you've probably run into. Well, here's how we can address that. So just as an example, we are looking at a $200,000 house, okay? And what they're going to need to do is they put, on the conventional, let's just say they're going to put 5% down. So, but in looking at it, they want to put on, and the details of what they put in is really insignificant right now for our example, but just to kind of give you an idea. They want to redo a bathroom, they want to redo a kitchen, and they want to put flooring throughout the house, okay, whatever. So what we will do is we have to use a general contractor. That's important. These programs are not designed for DIY clients. Cannot do that, all right? So what we do is we get a general contractor. They come out and they put together what's called a scope of work. Now we have to actually vet that contractor, making sure that they've been in the industry for a while. They've done a certain number of projects over the last recent year and so forth to make sure they're legitimate, because we're going to be paying them a good sum of money, as well as, you know, want to protect the client too, of course. So what we do is they go through and they go the scope of work, whatever it is that the client wants to have done. Then we order the appraisal. And when we order the appraisal, we hand that scope of work to the appraiser. So what they're going to do is they're going to look through the lens of, don't look at the kitchen as it is. Don't look at these old cabinets and the old countertops and everything. Don't look at it through that lens. Look through the lens of the new stuff that we're going to be putting in there. And what they will do is they will determine the value based on the post-remodeled condition. So here's what I mean. Let's just say, once again, for an example, that we're going to be putting $50,000 into the house, okay? So when it's done, it's worth $250,000. Now, so what happens to our buyer is their 5% down isn't actually based on the 200, it's actually based on the 250. So they will have to have a little more money down based on that, of course. But once again, they don't have to have $50,000 set aside in the bank for them to be able to remodel their kitchen and bathroom, all the stuff they want to do after we close. They can actually finance all of this money. Okay, so that's very important. So once again, what happens is when we write up the contract, what you will do is you will offer them $200,000, okay? You do need to let the listing agent know that they're looking at doing a renovation type of loan because of the fact that there's going to be additional people that are going to be having to walk through the house, contractors, right? So you need to let them know, hey, foreshadow the fact that there will be additional people walking through as opposed to just the inspector and just the appraiser. So keep that in mind. But what we're able to do then is, so we close on the loan, okay? Everything gets basically processed almost identically to what we're looking at with a normal transaction. We close on the loan. Both agents, the seller gets their money. As agents, you get paid because the loan closes. And what we do is, just using my very broad and simple example, we're going to set aside $50,000 in an escrow account. Very similar to a repair escrow, okay? And what we would then do is the contractor will come in, they'll start doing their work. Now, the work, by the way, cannot be started until after we close because it has to be in the ownership of the buyer. That's important. But moving forward, we have, $50,000 set aside for them to be able to do the work. And then typically what happens is they get their 50% of the money up front. And then depending on how it's structured and so forth, they can get up to 5 draws as the process goes through. So in the end, what happens is they get to move into their brand new home with everything exactly how they want it. And once again, they did not have to set aside and try to save up the money to do that. So it's a beautiful way for them to be able to get into a home without requiring a ton of money up front, because once again, they're only putting 5% down for the conventional option. Now, let's consider this. With a 203K, very exact same situation. There are some logistical things that are slightly different in terms of how things are worked with the contractor, but just as a general overview, exactly the same process, but the amount that we're looking at here is 3.5% as a down payment. So that's great. Now, the limitation in terms of loan amount for conventional and VA is the conventional limit of $484,000, $350 to be exact. Okay, this is the limit for conventional and for VA. Now, so there is no jumbo renovation that we offer. For an FHA 203K, so the FHA version is the same exact thing, same exact limit as the normal FHA loan, which is roughly $314,000. 827 or whatever the dollars are at the end. So you have to be careful here. So 2 things. You can leverage this not only as a buyer's agent, but also as a listing agent. Perfect example. I have an agent that I work with. She has a listing in Northville, down on, I believe it's on Reservoir Street or Avenue, whatever that is, off of Hines Drive and Northville Road there. And the homes in there sell for like $500,000 and up, depending on the condition and size. This particular home is listed right now for $250,000, and she keeps on getting feedback saying, hey, Great location, beautiful that it's tucked away there in Hines, but it needs a ton of work, needs work. And she specifically mentioned in the comments that, hey, this is a handyman special, fixer-upper, whatever it is. And so what I encourage you to do is as a listing agent, if you have a listing that needs work, that would not possibly pass a normal FHA inspection, you can actually market the home as a renovation loan opportunity. Plant that seed in the buyer's and the buyer's agent's mind as a listing agent and say, hey, here's an opportunity to do that. And by the way, if their lender does not offer that type of financing for the buyer that's looking at your listing, guess what? Guess who does? Bring them over to us and we can have a conversation about it so they can see how that works. So once again, likewise with VA, you can do the same thing. So you can leverage this not only as a buyer's agent, but also as a listing agent. So just to kind of briefly overview once again in very simplistic terms, what we can do. What it allows us to be able to do is leverage the program and be able to finance the renovation. It doesn't have to be as big as $50,000. I just use that as an example. It can be much smaller, okay? You can have a much smaller scope. Maybe you don't need to do a huge project. Maybe they don't have a garage, you want to build a garage, that's possible. With the conventional version, they don't have a pool and they want to install a pool, that's allowed. Not with FHA. FHA has to be more cosmetic and home improving the home, not necessarily with like a pool. But so my point is that it's a great option for you to be able to not only help your buyers, provide them more options if they're finding homes. Once again, just bring us back to our original statement is, especially this time of year, maybe inventory is a little lower. But the great thing is this. So guess what? So is the buyer pool. So there are fewer people out there looking. So therefore there are fewer competitive offers coming in. So maybe you can get an opportunity that you wouldn't normally get if it were March, April, or May. Perfect example. Exactly 6 years ago, right now, my wife and I bought our home. And it was a terrible time of year to buy a place. We got our offer accepted right around now. We closed the day after Thanksgiving. And we moved in on Christmas Eve that particular year in 2013. So it wasn't ideal. It was kind of cold when we moved. Fortunately, we didn't have snow on the ground that year. And it was slim pickings in terms of who actually helped us. But my point is that we got a really good deal on our house, $85,000 below list price to be exact, because of the fact there wasn't anybody else that was shopping in that particular area at that time. So it worked out really nicely for us. So if you have that buyer that isn't necessarily restricted by school district, or they're willing to move mid-year, maybe they're staying in the same school district, so that really isn't a thing. You have that buyer that's looking right now, they would really like to move, but they're struggling with the inventory that's out there because everything they see is not how they want it to be. Have a conversation with them about this. And if you don't feel comfortable with it, that's fine. If you don't feel like, I don't know enough about it to be able to speak intelligently about it, that's okay. That's what we're here for. Leverage us to help you with that. Guys, if you have any questions about this or anything else, we appreciate you reaching out. We're getting calls from you, introducing yourself almost on a daily basis. I would encourage you, if you have not looked at the video this week on how to refer clients to us, we made it a lot easier for you. Harken back to that. It's a great opportunity and a great way for you to be able to refer clients a little easier, because some clients don't want to be called. Some clients won't call if you give them our number. But if you actually give them our app, which is what we walked you through, they will do that. They prefer to be able to do that. They can upload everything seamlessly. They can fill everything out. They don't even have to have a conversation with us. Personally, I prefer to have a conversation because I like to get to know them and find out more than just the facts about them, because that really helps me in terms of putting together a strategy. But if they initially only want to fill something out, that's certainly something we can provide an opportunity for them to be able to do. All right, guys, appreciate your time today. If you need anything, do not hesitate to reach out to us. And as always, choose a great day.